And welcome again to another edition of Market Analysis for today, Wednesday, April 16th of 2025. I'm Joe Betancourt, and this is a recording done by Vantage Markets about 45 minutes prior to the USA session open. Well, there's a question that I want to raise, and that is, will gold take the next lead as the global hedge? Now, we just came off of one of the most volatile trading weeks of the year. Now, gold is making record highs, now above 3,300 an ounce. Oil and copper are tumbling, and the dollar is sliding. Meanwhile, U.S. Treasury yields are rising, and even as equities wobble here. Now, it's an unusual combination that's raising serious questions about whether the traditional flight to safety is breaking down, and the Fed, well, is walking a tightrope. Now, the inflation expectations are surging. The University of Michigan one-year outlook jumped to 6.7%, the highest since 1981. And now Goldman Sachs is turning more bullish on gold, raising its end-of-year price forecast at 3,700, citing central bank demand. So, well, I had said early in the month, at the beginning of the month, that I was actually, early in the month, that we could probably be more likely be seeing gold by 3,500 by June. Well, that could be sooner. Now, let's take a look at what we could come in and speculate for what could be today's market fluctuation and the stock market. Now, the most significant thing that's breaking down in the macro of everything is the U.S. stock markets going down. So far this year, we've dropped 6 trillion of market cap. To put that in significance, we rallied 12 trillion last year. So we've taken back half of it, but that was the biggest pump in history. So as we're looking at the U.S. stock market, if it goes down, then gold most likely will continue to go up. So for today's values, level of support, you see them in front of you, the market opened gap down. Okay, it did fluctuate a bit lower. It is retracing, recovering some of that lower push. But let's see. Let's see what will bring today. But it is not looking that strong for the market. So that's the S&P also opened up gap down. Let's use 5,300 as our first level of support, and this swing low here as our second one. Look, yesterday the market fluctuated to the upside and then quickly retreated. So we are in the third consecutive down day. So let's see. The consensus or the favoring will be to the downside. Now let's do the Dow, first level of resistance, 41,600, second level of resistance, 40,000 psychological round value, it's right there. So that's going to be our first level of support. And again, that swing low from Friday. So again, perhaps the Dow will test that 40,000 psychological round value. Let's see. Crude oil. Okay, well, crude oil, it fluctuated strongly to the downside in early trading session. It did rebounded from that. I'm going to leave the same levels of resistance support. So let's see. I'm looking at crude oil to stay within this range between 60 and 62. So now, obviously, demand it's going to falter and supply is picking up. So we could probably see crude oil below 60. So let's see when that will happen. Only time will tell. Then we have Nat Gas. So Nat Gas is let's use that swing low from yesterday as our first level of support, and 310 as our second. So basically not that much of demand really in Nat Gas, and warm weather looking to just subside that demand. So looking to sell Nat Gas. Gold. All right, well, gold is right here. Gold 33.25. is going to be that first level of resistance. I mean, anything from here above, we basically, okay, so the all-time high now is 3313.59. So that's going to be obviously the all-time high, making that movement, the parabolic movement. It broke out nicely. So, hey, as gold continues to being bought by central banks, we're going to continue to see that. Now, silver. Now, gold has silver. There's correlation between gold, silver, and palladium and platinum. So, and they're going up. So let's see, 33.5 for silver. Silver did bounce off that 50-day moving average here. $32 round value for a first level of support, and I just use that swing low from Monday, if you will. So buying silver, copper. Now copper, the demand for copper because of AI, EVs, and whatnot is looking to subside because of Trump's tariffs and putting pressure on industrial metals. So we could probably now see copper trading lower, going towards looking for that $4 psychological. Obviously, we were pretty far from it, but hey, look for sales. Bitcoin. All right. Well, Bitcoin. Bitcoin. If you take a look at Bitcoin, in its case, for its resilience in this macro environment, you see that Bitcoin has been showing pretty strong risk-adjusted resilience lately to the S&P 500 going down. So first of all, you want to take a look at what President Trump's policies are going to be, looking to make the U.S. the hub of cryptos, and obviously we are looking that Bitcoin had, after reaching that threshold of 100,000, it has quickly retreated, and it wouldn't be so far-fetched to think that we could probably see Bitcoin even lower, because Bitcoin, it had there's been about 3 months of outflows on Bitcoin ETFs, and that's about $5 billion, and and there's been significant inflows for gold ETFs the months of February, March, and April. So people are looking perhaps to move away from Bitcoin. And if you remember back in 2008, 2009, the bottom line, it has millions and millions of crypto dependents. And then back in 2009, there was only one crypto, Bitcoin. And now, according to CoinMarketCap.com, there's 13 million of them, and all of them are correlated involving their dependence, things like Ethereum community going down, things like that. And obviously, you also think of that peak, all right? And to think that Bitcoin came after that 2008 peak in the stock market, and that's when Bitcoin was born, of that financial crisis, because we had that bubble bust, right? And looking at indicators for that not to be the case, the key thing that really strikes me is Bitcoin was born of the financial crisis, and it rallied massively, pumping liquidity in the stock markets. So now it's starting to tilt down. It looks like it's in its early days. Some people say it's a gift to buy. I will say probably not. So, to say that we could probably see again Bitcoin at 10,000. Let's see. I mean, I could be wrong. I have been wrong before, but that's just my take on that. Currencies are looking mighty stable. I will say that this is ranging. It is ranging. Okay. We are making equal highs, equal lows, confident congestion, and this is a great setup for a breakout again. And if the dollar index takes another plunge, we'll see that break up to the upside. The pound, all right, so the pound is piling away, And we have been on a 1, 2, 3, 4, 5, 6, 7 consecutive days of uptrend, or higher highs, higher lows. So that's an uptrend. 133 is where it almost hit today. So let's use that as a probable level of resistance for today. Support, let's use 132, which is right there. And then we'll use that swing low from yesterday as our second level of support. But let's see, in dollar index, obviously, also making equal highs, equal lows, coffin congestion, horizontal movement, is within range. A breakout to the downside. Let's see. Let's see what will happen. All right, well, that's it for me today. Have a great trading day, and I'll see you tomorrow.